Imagine waking up one morning and finding out a bunch of students, gamers, and internet trolls just wiped out billions from Wall Street's richest investors. This actually happened. And the craziest part, it all started because of one ordinary guy sitting in his room making YouTube videos in a red bandana. No billionaire connections, no giant company, no secret insider information, just a laptop, an unpopular opinion, and a stock everyone thought was dead. But within weeks, the entire financial world was in panic. Hedge funds were collapsing. Trading apps were restricting users. News channels were calling it dangerous. And millions of ordinary people believed they were finally beating the system. So how did a struggling video game store become the center of a financial war? And why were billionaires terrified of Reddit users? This is the unbelievable story of GameStop. In finance, there's a term called dumb money. That's what Wall Street often calls ordinary investors. Students, workers, everyday people. The assumption is simple. Regular people don't understand the market. But in 2021, something happened that completely shattered that belief. And at the center of it all was a man named Keith Gill. Keith Gill wasn't famous. He wasn't a billionaire investor. He worked a regular job as a financial analyst. But online, he had another identity.
On YouTube and Reddit, he became known as Roaring Kitty. Every day, he posted videos talking about stocks. Most people ignored him. But then, he started talking about a company almost everyone hated, GameStop. Now, if you remember GameStop, it was a video game retail store, and by 2020, many believed it was dying. People were downloading games digitally, retail stores were struggling, and investors believed the company had no future. Wall Street was so confident GameStop would fail that massive hedge funds began betting against it. And this is where things become important. To understand what happened next, you need to understand one thing: short selling. Here's how it works. Imagine you believe a company's stock will fall, so you borrow shares, sell them immediately, and later buy them back at a lower price. If the price drops, you profit. That's exactly what hedge funds were doing with GameStop. They were making enormous bets that the company would collapse, and they became extremely aggressive. In fact, they shorted more shares than actually existed. That meant if the stock price suddenly went up instead of down, they could lose unimaginable amounts of money.
Keith Gill noticed this, and while everyone else saw a dying company, he saw an opportunity. He believed GameStop was undervalued, but more importantly, he realized Wall Street had become too greedy. At first, people laughed at him. Even on Reddit, many thought his idea was insane. Imagine telling people, hey, let's invest in a dying video game store. It sounded ridiculous, but Keith kept posting updates, calmly, confidently. And slowly, people began listening, especially inside a Reddit community called WallStreetBets. This wasn't a group of professional investors. These were ordinary people, college students, workers, gamers, people stuck at home during the pandemic. Many were frustrated with the financial system. They believed Wall Street always won, while regular people suffered.
And suddenly, GameStop became more than just a stock. It became a movement. Then, the impossible started happening. More and more people began buying GameStop shares. The stock price slowly climbed. At first, hedge funds weren't worried. They thought the excitement would disappear, but it didn't. The higher the stock went, the more pressure hedge funds faced. Because remember, they had bet billions against the company. And when a heavily shorted stock rises rapidly, something called a short squeeze happens. Hedge funds are forced to buy back shares to stop their losses. But their buying pushes the price even higher, which creates panic. And that panic creates more buying. It becomes a financial explosion. That's exactly what happened. GameStop went from around $20 to hundreds of dollars. The internet went insane. People started posting screenshots of massive profits. Some turned thousands into millions. Memes flooded social media. And for the first time in a long time,
Ordinary people felt powerful, but on Wall Street, fear was spreading. Some hedge funds were losing billions. One major fund required emergency cash just to survive. Financial news channels suddenly began attacking the movement. Experts called it irresponsible, dangerous, a bubble. But many ordinary investors saw things differently. They believed the system only supported free markets when billionaires were winning. And then, something happened that made the situation even more controversial. Trading apps like Robinhood suddenly restricted people from buying GameStop shares. Users could sell, but buying became limited. Immediately,
Outrage exploded online. People accused the system of protecting hedge funds. Politicians got involved. Congress held hearings. And the entire world started asking, was Wall Street truly fair? Meanwhile, Keith Gill became an internet legend. The same guy people mocked was now at the center of a global financial story. His investment reportedly turned into tens of millions of dollars. But for many people, this wasn't even about money anymore. Keith represented something bigger. An ordinary person challenging powerful institutions. And whether people agreed with him or not, one thing became undeniable. The internet had changed finance forever.
GameStop's story wasn't really about a video game store. It exposed something much deeper. For decades, Wall Street had enormous influence. Big institutions controlled information, money, and power. But social media changed the game. Now millions of ordinary people could unite instantly, share ideas instantly, move markets instantly. And that terrified traditional finance, because for the first time, regular people realized they could actually influence the system, not individually, but together. In the end, some people made fortunes. Some lost money, and GameStop eventually cooled down. But the impact of this story never disappeared, because it proved one thing: never underestimate ordinary people connected by the internet. A random guy with a YouTube channel started a movement that shook Wall Street. And maybe the craziest part of all is that nobody saw it coming. If you enjoyed this story and want more real financial stories about power, money, and hidden truths, subscribe to Orvanta Capital, because the next financial revolution might already be happening.